Hello, I'm Kamyar Rezaie, and this is Minds of Commercial Real Estate, the show that takes you behind the scenes of the dynamic world of commercial real estate. As a commercial broker to high-profile clientele in Southern California, I've grown a deep passion for the real estate industry. And in this show, we'll be exploring all things commercial real estate through conversations with some of my close friends, colleagues, clients, and partners who share my passion for the business. Thank you for joining us for this episode. Please remember to give us a thumbs up, subscribe, and of course, leave comments with any questions or thoughts you may have about the show. I'd love to hear from you. Hello, welcome to the show. Today I have Nathan Villa from California Bank and Trust.
Thanks for having me today, Cam.
Thank you for being on the show, Nathan. We've done many transactions in the past. We're working on a couple
new ones, yeah.
And just wanted to go over some of the stuff we've done in the past and how we've been able to go about them and doing some loans during the COVID years.
Yeah.
And prior you were at another bank where we got introduced. It was a bank out of Arizona.
That's right. Yeah, they were a Phoenix-based bank that had a footprint in California. Yeah, and they were just trying to do SBA loans to kind of leverage. We had a legal lending limit that kind of handcuffed us, so we used the SBA loans to get to the larger loan amounts. Yeah, so yeah, it's been a pleasure working on your deals because you know how to scrub them and you know what we like and don't like. But I think that's also kind of functionality of, hey, we tell you what a yes looks like when there's a no, and we don't ever say maybe, because maybe is kind of like the kiss of death in like our language, right? Because it's just like, I'm going to be in suspense. I think you told me, or we won't say that lender's name, right. But you know, they're kind of like spinning your wheels and they're not giving you any feedback. But at least you know for us, okay, if it's a 100% projection-based deal, probably not for me. But if it comes with real estate and good outside income and we can tell a story, then I think California Bank and Trust will have like an involvement in it. Or, you know, if it's a expansion, if it's tenant improvements, like the one that we just did for that sushi restaurant, you know, we love those deals because they've got historical performance and, you know, they're moving to a location that's close by to where they've, you know, bestowed most of their goodwill. It makes all the sense in the world. So, I would say a lot of what you and I do is the storytelling, but most importantly, your numbers only can say so much. You have to be able to have those assumptions, and they're written or verbal, that kind of tell a story on why a deal will make sense and why a banker or a credit team, or in our case, as in Utah, who isn't like on the ground bootstrapped, will understand why it's comfortable to approve that request. And that's the functionality of you and I.
So tell me more about California Bank and Trust, who it's owned by, what is their philosophy, and their exposure nationwide.
Yeah, well, we're predominantly on the western United States to maybe the Midwest. It's owned by Zions Bank Corporation. So the bank has been around for well over 100 years. It's a relatively conservative real estate outfit. So portfolio is pretty clean. Assets and cash is substantial. When there was that run on all the regional banks and whatnot, you know, we got lumped in there because of our asset size and what our classification was. And so our stock did go down a little bit like all the regional banks, but for bankers like myself, I bought into our stock a lot because at that time, I think it was trading at 19 and it's up in $40 now. I mean, our CFO, Forbes, was like, oh, this guy's bought over $1 million in stock. Well, you know, I didn't have $1 million lying around, but I definitely bought my fair share. And, you know, it's a good bank. They value relationships. They're not necessarily transactional. So, you know, we've got a wealth of products that far exceed SBA lending, commercial lending. There's a whole consumer lending side. You know, there's private wealth management. There's treasury management for a business. So every level of sophistication that they need, where, you know, Chase and Wells have made a name of themselves doing that, but they're not as personable. You know, if you need anything, just like any of our clients that we've closed with, they call me, they email me, or maybe one other person on my team, and they get whatever they need. You know, they're not calling a 1-800 number or submitting an email to like an inquiry box. So that's how the bank's set up, just kind of for business to business. And then, you know, all these business owners, they have personal interests too. So we want to be able to take care of them on that as well.
So we've done deals that are real estate based, that are TI based, that the client has real estate. We've done franchise financing where there was no real estate involved, where we gave them a 10-year fix based on the SBA, and those sometimes were in the 4 and 5s, and today they can never get them with today's rates.
Yeah. Treasuries, unfortunately, we're going to be around 6 or 7%, but that's why the name of the game is if you are going to go through that spread and index, maybe go short term, go 5 years, because we're going into an election year now, and who knows where rates are going to go. We all expect kind of prime to dip a little bit, but maybe not 4 or 5%. There was a sheet I saw for when, we have to do these LOI templates. And at that time, whoever wrote it, prime's at 5.25%, and now prime's like 8.5%. And if someone's listening to this in a couple of years, they might laugh at either how low or high this is. We won't know,
Right.
We would hope it'll go lower, but yeah. So most borrowers are doing the short-term fixed portions for their loans because they fully expect rates to drop and then to come back to you and I and refi.
Let's hit a little bit further on one of the deals that we did. That was a franchise financing that our client did not own any real estate. We were able to buy them a private post office, but
That's right.
15% down.
Right. Yeah, that was a great opportunity. That gentleman had already had, I think, a professional services business. So he had experience. He knew the market. He knew he'd have a synergy there. It was what he was currently doing would fit in well. There would be no overlap with what the services that the business that he was buying was offering. So the combination of the two made now all the sense in the world. And, he had demonstrated good liquidity. He had, great credit, and his projections were very sound. So he had a very detailed business plan, which I know you helped him with, and projections, but that helped us get comfortable with it. And so he's a great borrower. I talk to him all the time.
So it's interesting. So, a lot of people don't know that you can buy a business, get a loan to buy a business without having real estate.
Right.
Via the SBA, but if you do own real estate and you're getting a business acquisition loan, they will put a second lien on the house.
Great point there. So if you're looking at lendable equity in a home, so SBA advance rates are going to be about 85% on single family residence. So if there's already HELOC on there, you might get off the hook. But if you only have a first trust deed and you have 25% or more lendable equity in your home, the SBA is going to make that lender take all available collateral until they're fully secured. But every bank has different thresholds for what we would call blue sky or uncollateralized loans. And I can tell you, our bank, we don't want to exceed more than about $1.4 million in unsecured. There are some exceptions to that, but it's all going to be case by case.
Well, it was like the other scenario where we did TAI loan for that sushi here in the Valley.
Oh, yeah.
Owned real estate, both partners,
Right.
and you did a cross collateralization on both the partners' homes.
We did, yes, because that was a relatively large build, and it was going to be 100% projection based on that one. I mean, there was some rent replacement, but not really. But that was actually a relatively smooth transaction.
Absolutely.
Considering. So, yeah, and I think we're going to go to that grand opening pretty soon, right? Yeah.
In about 2 months.
Yeah. So I'm pretty excited for that. Yeah.
Great. Tell us more about what is your bank's niche. What do they like to do? What do they not like to do?
Yeah. Well, let's start with what we don't like. We're not going to be a big player on hotels. We'll look at refinances, but ground up construction is going to be really tough. We're seeing a lot of inquiries for that, because that just... a lot of banks have had their fill or they have concentrations, and so the brokers have to move on and find other homes. And these could be, most of them, that state, but limited liquidity. And the key is now, hey, I want to cash out because I sunk all my cash into this business. Those aren't going to be good transactions for us. We'll look at gas stations, but it's going to kind of be case by case. Do they cash flow? Is there a good story? What's the long-term goal? Are they swapping out some of their, pumps for charging stations? Are they expanding their C-stores? Because, if you look at the Coachella Valley, you go down to Palm Springs, a lot of those operators already have the charging stations, but they already did 3 to 5 years ago. They expanded their C-store because, they're going to have a captive audience. Someone's charging their electric vehicle for 45 minutes or an hour. They're going to pop into the C-store. They're going to hang out. They're going to spend some money. So those are, I would say it's really simple. Those are the two that we don't really lend to that are eligible for SBA financing. We will consider them, but it's not going to be something I'm going to lead with. We love light industrial. We love medical. We love any sort of owner-occupied office building, whether that's an office condo or whatever. We love schools, as you know. We've done a school together. Private schools, academies, you name it. We'll look at them. And then on the non-real estate side, because I would say that's probably our strongest card is real estate. We're pretty good at business acquisition, as you know. We're going to want to see a minimum of 20% down. However, I did do 100% financing this year. The trick is, though, they have to have an existing business that has the same NAICS code. So this was, in this example, these guys were 7-Eleven and grocers, and they bought a market. So one of their grocers had the same NAICS code as the market they were buying, and we're allowed to give them 100% financing.
Is that via SBA or conventional?
That's via SBA. So they had 10 years. So unconventional for BizAc, most banks aren't going to go out more than 5 or 7 years. Right. Unless it's a medical practice loan. And since most of them aren't, everyone leverages the SBA. It's a 10-year product if it's non-real estate, and there's no prepayment penalty.
Sometimes those SBAs for these business acquisitions are variable rates. Sometimes you've given them 10-year fixes throughout the term.
Yeah.
There's instances where there's no payments for the first 3 or 6 months if there's a build or something.
Sure. Yeah. So, that's a great point. So if you're transitioning into a business, or if you're doing any sort of construction, once we deem it stabilized, that's why projections are so important, is determining when will you be break even, when will you start turning $1 in profit, because we have the ability to go interest only for 12 to 18 months. And in some cases, we can do a loan modification and extend that further. So the SBA and the bank have been very, very lenient and supportive in helping businesses do that. And then, as far as some of these other loans, it's just kind of case by case. Some of them don't necessarily need the interest only period. It's going to be a question of cash flow and whether or not we're going to be in the deal and we're fully secured by real estate. So there's specific examples. We can discuss those too as well.
Understood. And do you keep these loans on your balance sheets?
We portfolio everything. We don't sell anything on the secondary market. And you know what? One thing I forgot to mention is we really don't do a whole lot of variable rate financing. It is available, but we like to fix our loans long-term, in most cases for the life of the loan, because then we don't do a stress test. On a 7A loan, it's important to understand there's only a 3-year prepay. If it's a 25-year real estate loan, it'll go 5, 3, 1. So it doesn't matter how long you fix it, 10, 20, 25 years. So
typically, as you know, I like to always get my clients a fixed rate throughout the term of the loan. So they never have to worry about it in the future unless they're able to get a lower rate. And, years.
Every one of the deals that you and I have done have been fixed. Yeah.
Helps the clients out, knows what their payments are going to be, never have to worry about the
control their interest expense. Yeah.
Okay. A lot of businesses took out EIDL loans, throughout the COVID days. And now that we're, you're doing these transactions, do you see that maybe hindering the process?
Oh, yeah. Approval? So there's a naughty code on there when you go into the E-Trans submissions, and it's some of these people either misappropriated or didn't process their forgiveness properly. So they're audited. And then on the EIDL, if you miss a few payments or whatever, the SBA will red flag you, and it's going to be tied to your social and your EIN. So we had a situation recently where a borrower was buying a business. They actually work for this business, and they bought into a business, and this business was red flagged by the SBA. So we had to switch that one to State Guarantee California, which is a product only exclusive to California. It's very similar to an SBA loan, but it doesn't have all the rules and hangups that SBA has. So that's been our workaround, because we could prove our borrowers actively didn't have a hand in that. We were able to switch from an SBA loan to a state guarantee loan. And the same goes with like a partner buyout. I have another loan right now. It's actually a gas station, and it's a partner buyout, and they own the real estate and the business, and one of the partners wants to be bought out, but the way they are structuring is a stock sale. So the SBA has very strict rules saying the max amortization is 10 years. It's really aggressive repayment. So state guarantee is going to do that deal in 25 years. So now their debt coverage ratio went from like a 1.23 to a 1.59. So it looks way better.
Let's hit a little bit on the E-Trans. What is E-Trans for the SBA?
So all of the preferred lenders, as well as the GP lenders, are submitting, all their reports, all their approval. The SBA has recently changed their process, and they'll give you your SBA authorization number. And then your SBA authorization number, you use that to populate your loan documents. And that's kind of like the final say-all. It's like, you've done every background check, you've looked at everything, but that's also when it'll pop up with those red flags. A lot of the bigger banks, including us, do pre-checks. So if we think that there might be some issues, we'll do a pre-authorization early on just to see if anything pops up. And we caught that early with that first example that I gave you, and then we had to pivot.
Okay. So a state guarantee, let's hit it a little bit on that subject.
Yeah.
How do those work? What are the loan limits, size limits?
Size limits up to $5 million. It's an 80% guarantee. And rather than 3.5% on an SBA loan fee, it's 2.5%. However, their guarantee is only good for 7 years. So what a lot of banks will do, if it's real estate, they'll do 25 years due in 7. Or if it's non-real estate, they'll do 10 years due in 7. It can be used for a whole myriad of things. They just have to ensure job creation or retaining jobs, and it has to be owner occupied. But yeah, it's a great product, and it's also good if you've got borrowers or there's borrowers listening right now that they've got existing SBA loans, and let's say they have $4 million in outstanding for SBA, but they need $3 million. State guarantee is the way to go, because they can still get a very similar product. State guarantee is going to do up to 80% LTVs on real estate. In some cases, you might be able to do more, but you have to pledge additional collateral. So if you have a home, so for example, you want 87% because you want 85% financing, plus you want to finance the guarantee fee, you're going to have to pledge your home. So just be prepared for that.
What about in terms of qualification? Is it the same qualification?
Almost identical to SBA.
Almost identical.
Yes. Some banks, though, might underwrite to conventional, so it'd be similar to like if you're doing SBA 504 real estate loan. For us, we're looking for a 1.25 debt coverage ratio, whether we can capture that on business only or in global.
Yeah. Can you do the state guarantees on projection, or is it the last 2
Yes, you can.
years?
Yes, you can. We may not be a player on that per se, but if it was fully secured by real estate, we would probably have an interest.
What is your typical client that you're dealing with a lot more now? Are they a lot more, real estate based, or is it business purchases?
Last year it was mostly real estate, and it was ironically a lot of medical. I did a ground-up construction for a dialysis center for like right at $5 million. A lot of small little medical deals, and then towards the end of the year, it really shifted. I'm doing a lot of logistical and truck and freight yards, like tons of them. Just came out of the woodworks. A lot of good Asian borrowers, and they want to leverage SBA to keep their cash on hand.
Makes sense.
Yeah.
You hit the subject of those PPP loans that might come up and pop up. I've recently faced 2 separate deals which my client thought the PPP was forgiven and it wasn't. And was it the fault of him or the bank? I'm not sure, but he had to pay it off for my transaction to go through.
Yeah.
Because now it's too late. That's all the deadlines.
Yeah.
Are you seeing a lot of that?
All the time. And if they have to amend anything, there's one we're looking at right now where it was with a good SBA lender. They had a charge off for $15,000. And so we're going to work around that because he has proof of paying it, but the SBA takes months, if not a year, to update that. So that's another one I have to go state guarantee on, because he's not going to be able to get his SBA authorization. It'll just take forever.
Understood.
So, I mean, and fortunately in that situation, it's a refinance. He already owns the asset, but he doesn't want to wait 6 months to a year. He wants that benefit of improving his interest expense,
Are you mainly doing owner occupied or?
No, actually, I do my fair share of small balance investor. That's also been a really good niche for me. The California Bank and Trust has Express CRE product, and that could be multifamily, single tenant, industrial, multi-tenant industrial, retail, some office, but those products, and there's a lot of vacancy in office. So if you've got more than 20 20% vacancy, probably not going to work for us, but we'll go up to about 3 million on that product. And it's been nice because a lot of the bigger banks for A-paper borrowers, those requests are too small for them. So they slip through the cracks and they're like, why do I have to go out and get a loan that's like in the high 7s or 8s? Like, I want something that's, you know, like what my FICO and what my financials dictate, and we're giving that to them. So they're, right now, it's treasuries plus, I would say, the high 2s and 3s. So rates are in the like mid to high 6s and maybe low 7s. And those close fast.
Fixed for how long?
They can fix them for 5 or 10 years. Almost every borrower wants a 5-year because they know it's going to drop.
And what amortization?
It's 25 due in 10 for everything but multifamily. Multifamily is 30 due in 10.
Yeah. Up to 3 million fast track.
Up to 3 million fast tracked, yeah. When it gets bigger, they go larger, and generally there's bigger players that'll give them better terms. But we're filling that niche, and what's cool, almost every single one of those transactions, these guys are owner-occupied business owners. So it's like you get your foot in the door and you get the other business too. In fact, we had a deal last year for a partner or for business acquisition where we financed 2 of his investor office buildings and then gave him cash out to inject into this business. And he bought like a metal supply company. I mean, its EBITDA is ridiculous. I mean, I wish I would have bought into that too. Yeah. But yeah.
We're currently working on a proposal for a client that's looking for a HELOC on a commercial property.
Okay.
How is your...
Those are tough. We have to understand the nature of the business and, you know, why maybe it doesn't have, you know, traditional receivables or inventory.